Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. The world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it's bad. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out, and you don't think that anything is wrong?
Okay, higher than
back tomorrow, I'll read it all.
380k. Also now.
Okay, I'm like way late.
Year on year, 5.5%, 5 spot.
Good morning, guys.
In line with the forecast of 5 spot. 5%.
I'm hearing. What am I hearing?
The
here?
Canadian employment change at 15.3k, 15.3k, lower than the forecast of 40k. US
non-farms payroll actual 428k versus forecast 380k.
Canadian unemployment rate 5.2%, 5.2% in line with the forecast.
Oh, by the way, is it? Yeah, okay, I still have my orders out there.
6k.
I left this trade from yesterday on.
US average work week hours 34.
And on the ES. Oh, ES it taking off.
7.
They taking off.
Month on month.
I liked that, huh?
0.3% lower than the forecast of 0.4%. We also have the US labor force participation at 62.
So payrolls outperformed
than the forecast of
only a little bit.
5%. US manufacturing payroll.
I'm not sure I understand why that means that rates go lower, but okay.
Participation rate at 65.3%.
I guess interest rates right now with the 10-year at 3.07 are high, right?
4%, 3.4% lower than the forecast of 3.6%. Taking a look to the markets here, downside movement in the Dixie, upside movement in the S&P 500, upside movement in gold as well.
I don't know. It's a little weird. There's certainly whipsawing.
Some CAD weakness out of this.
I wasn't able to get the ES up to where I would like. Not to where I would like, but hey, maybe they'll work it out in the end. Here in the Treasury, though, I really like how that played out. Oh, I didn't get filled there. This is crazy.
The U.S. employment situation report for April 2022 is now available.
Now, what was the labor force participation 62.2 versus expected 62.5? Where is what is the actual employment rate though? Oh yes, U.S. employment rate 3.6 versus expected 3.5. So the two surveys have kind of like contradicted each other as of late, but this time they were both in line with each other. And you know, I think that what we made this actually was maybe the best that you could have gotten. This is maybe the best situation you could have gotten for the non-farms, because if this had come out and was like a blowout non-farms, like a really positive non-farms, that would maybe roil this market. That would be like, oh man, the Federal Reserve is going to have to ramp it up even more. But it being just a mild beat, that's not bad, right? That's not bad. A mild beat means that the Federal Reserve can just continue on their path to get back to neutral as quickly as possible. And it doesn't necessarily have to create a recession. Although I think that the thing, something that may be going on here in the market that we discounted too much or kind of forgot about is that China is like still pursuing zero COVID policy, right? That could be a real hamper on the world economy. So I think we still got that. That might be why. I don't know. This is the only explanation that I can come up with, because the action that we had yesterday was like, what the heck? Right? What was it? The NASDAQ was down? It was down 5%, something like that. Dude, I was looking at it going into that last hour and they were sitting at negative 6%. I was like, they gonna hit a circuit breaker. They could have hit a circuit breaker yesterday. If now the funny thing is that when it came to the market on close, yeah, 4.99, When it came to the market on close, I was worried that we were going to have another massive. Remember last week we had some market on closes that were like, in the 10, 11 billion, which I've never seen before. I've never seen anything even remotely close to that. Oh my gosh, is the heater on here? It's getting hot in this room. Nope, I don't know. Maybe I'm just going to be sweating today. It feels hot in this room. Oh, I can't believe that I missed that at 118. I really wanted to pick it up again there. It's okay. It's okay. We've already caught it once. Look at that. So we've got ourselves a good buffer to try and ride this over the weekend, I guess. But
here, U.S. non-farm payrolls prior revised to 400.
China has so many empty homes that they can house the entire French population. Oh, really? Is it that bad?
Unemployment rate prior revised to 0.
I knew it was bad, but that is a startling statistic, isn't it? Can they really keep that going? I don't know. Anyways, how are you getting to like seriously? Before COVID, I would be like, nah, you can't. The circuit breakers, there's no way they're gonna hit this. It has to be the end of the world to be hitting the circuit breaker, right? And then they just did it day after day after day after day in the COVID era. And I think part of that was, well, it really was like the end of the world to some extent. And there's the gamma hedging out there. Like the options started to become a more dominant factor before COVID and just only strengthened through it. So, and then you add on top of that the indexes and the robots, and we just have this market that can just really, really overreact to things in the S&P 500 in particular. But to see it acting like that again yesterday and almost getting to, being 1% away from a circuit breaker, and there's not an active crisis going on. I get that the Federal Reserve is raising interest rates and that's really bad for risk assets and everything, but there's not a financial crisis going on right now. How do you justify that kind of action? And the only thing that I can come up with is, well, but China's pursuing zero COVID policy right now. Right. I think that could be a very long-term drag, because it's not just now. Like they lock down in Beijing, they pursue zero COVID. You're going to have a lot of excess deaths, by the way. They can just ignore those. They can just, had nothing to do with COVID, or just not show that stat, right? That's what they'll do. But they'll pursue that policy. They'll have a lot of excess deaths. But then it won't be over, right? Because you're pursuing zero COVID policy, you're never going to build up herd immunity like we have in the United States and in the West, essentially. So what they're doing essentially is just prolonging COVID and prolonging it and creating maximum disruption as well. So now we're looking at something where it's like, yeah, we could have volatility all summer. I hope not. I hope that the market stabilizes here. I really do. I hope that this report is enough to just make everybody chill TF out. Seriously. But there is a possibility it could go through this summer. I hope that doesn't happen. But then if we get through that in the summer, there's a chance that things get worse in the winter and we go through it all over again because of China. Hank says that's a complete mystery. Kids and athletes developing heart problems are totally normal. I always get a little nervous when we dive into this subject because number one, I'm not too sure anymore how relevant it is to us in our trading and or understanding the world. To be honest, it's kind of started to get into conspiracy theory / just wonk territory. But I do enjoy talking about it, and it's really hard for me to see somebody say something that I'm pretty confident is incorrect or at least deceptive, and not say something. So here's what I understand on the heart problems thing. Taking the vaccine can impact your chances of developing myocarditis. It's been pretty firmly established that is the case, but the percentage chance of you catching of you experiencing myocarditis from the vaccine, number one, is extremely low. You know, like it's less than the chances of you dying from COVID, for starters, and the chances of a healthy person dying from COVID is very low, right? And number two is less than the chances of you developing myocarditis from catching the actual COVID. So on that point, it does seem to me that there was an effort to kind of silence that this was a thing in the media, but at the same time, it would not be a reason to avoid getting vaccinated, unless maybe you've already had the virus. The absolute risk reduction rate, according to their own research dump, was like 0.02%. Yeah. It's kind of a difficult issue because on one hand, you have people that they'll listen. It's just like me. I do this, man. I see something. I'm doing it right now. Right? I see somebody say something that I know is incorrect, and I can't help it. I have to say something. I just I'm that kind of person. I want people to understand what's going on, you know? And I think that people are doing that, right? But then at the same time, you kind of have to ask, but is it actually relevant? How big of a deal is it actually? Right? So you got that thing going on, but then you got this other thing that is like, well, yeah, but these companies are kind of doing things to try and maximize the number of people that get the vaccine, and are maybe not always being forthright with you about it, right? But then, was the thing that they were being not forthright on really matter that much? I mean, like, if it came out and it was like 5% of people that take the COVID vaccine die, then of course, like, we wouldn't be doing it anymore, right? But the things that they've been pushing against it is like, doesn't really seem like it meets the threshold of having to do anything about it. You know what I mean? So it really comes down to an argument of, what is actually factual or not, though, right? I'm finding more and more that surprised at how many people out there in the world don't think like that. You know what I mean? So yesterday, so like there's a lot of people. There's a lot of people that would be like me, and they would say, "Okay, I made this trading robot. I maybe don't know everything about algorithmic trading completely, right? I think that at this point I've learned a lot about algorithmic trading from the perspective of what you can do in NinjaTrader 8. I am a top tier expert now at that, and I can help you write just about anything that you want to write in NinjaTrader. And I've learned a lot about the backtesting. I do not know very much about the machine learning frontier. And it kind of seems to me like there are still some concepts that to really be successful at doing this that are just a little bit beyond my reach, right? But, I could come in and say, well, even though I know that there's some problems with it, I can still go and put it out on the internet. And, it's up to them what kind of risk they put on with the robot, right? There's a lot of people that will do that. I'm not like that. But what is surprising to me is that I thought most people were like me. They'd say, well, no, I really should be careful about what I'm selling because, people are going to be taking on risk with it. What I'm finding is that it seems like most people actually aren't like that. Most people are like, nah, I'd rather make money from selling it. How is a single person expected to be a profitable algo trader? Seems impossible to me. You get lucky, I think. I really think that it's like you have to get really lucky, dude. Like to be a profitable algo trader over a long period of time, it's super hard. Yeah. All of the examples that I've seen of people just in trading in general that were really truly successful at this were all examples of they worked for another firm, they saved up a buttload of money, and then they went and they started their own firm. So they had basically already become a millionaire from working on Wall Street, and then they used that to become a billionaire. I see that. I hear that a lot. Because every hedge fund has a story like that, where this guy was successful and then he turned around and he turned it into a real business. Hey. Yeah, algo trading requires, it really does. So we're going to make a video about that this weekend because Daniel Inskeep made a video that I thought was a really good video, but, he only went through, it was a video of him using somebody else's robot and not having any success with it. So I think he does a really good job at like the narrative element. Like I feel like I should just hire Daniel Inskeep to do like a weekly synopsis of our trading for us so that people can follow how crazy and difficult trading is. Or just of the market, because I thought that his narrative work is just really good. I don't think I could do it as well as he does. But I digress. He made a video about algorithmic trading, and he didn't think that it was going to work, and of course it didn't work. But there was so many things there were so many red flags along the way that he was doing it that I feel like have to be pointed out, because I could have saved him $1,000, because there was, and really when I look at it, that creator or the person that made the robots and is selling them, you got to wonder what they're doing. If they know that they work like that, or if the person is just naive. I would think that if they've been selling it for years and years and they've been following their customers, they would realize that their product is bad. That the algo generally doesn't work for people. But so I'm going to make a reaction video to that this weekend and I hope that he sees it, because I tried messaging him and commenting and I didn't get anything back from him. So I'm going to make a video. Hope he sees it. If anything, YouTube will show it to the people that saw that video. I think so. So yeah. Fun stuff. But yeah. You're totally right, Roland. I like just straight up, I'm telling you guys, it is easier. It is easier to become a successful trader from watching the news and just being a discretionary trader than it is to become a successful algorithm trader. Okay. Everybody thinks that all of this technical analysis stuff, it must work. My problem is my psychology, and the reason that I don't. So, like for me, yesterday, this week, we've lost $100. I'm so bitter because we had just come out of a $100 drawdown, and I was very happy about it. And then we're back in the hole again. This happens to me a lot, though. It's just the constant struggle. And there's kind of two problems here. Is one, we don't understand every market, right? How well I do is very correlated to how well I understand the market. And last week we were understanding it really, really well. And frankly, even Monday, Tuesday, what happened after the Federal Reserve? I don't know if anybody can understand that, man. S&P 500, or sorry, NASDAQ up 4% one day, down 5% the next day. Like, how do you make sense of that, man? And I mean, I think that after the fact we'll be able to, but sometimes you just can't know what's going on at the time, that's tough trading. And I yesterday in particular just happened to take really, it was like the combination of all of the above, right? I was taking a risk that I probably shouldn't have in the first place at exactly the wrong time. And then after that, like the psychology could just kind of go south. So like psychology is totally a thing, right? I look at myself and I'm like, if I can get myself to where when I make a bad trade, I can get myself back in the zone faster, that's going to be a big boon to my trading. That's going to help a lot. But it doesn't deal with the problem that you just don't know every market, right? So it's still hard, if not maybe even impossible, right? But people think that if I just solve that psychology part, that then everything will work and to be a profitable trader. But what happens when you get into algorithm trading is you find out that, oh, yeah, the market is really statistically efficient. Any kind of edge that you can pull out with just using math, at least from the math that I understand, doesn't really yield results. You might think that you see results at the first because of backtesting biases, but then when you start trading it doesn't work out the way that your backtest says. And I went through that for years. I hate having the yips. Market's really super goofy. Yeah, I mean, I'm not going to take. I have these sim trades on, but I'm not going to take on risk today. Gonna wait until next week. Wait, now we can keep. I've been at points where I'm like, I gotta be careful, or I won't be able to keep going. But no, I can continue trading my live account in perpetuity now. So we have till the end of time to figure it out. And you know what? We actually are doing really well. If it was not for the monthly data fees, we would have made some money. So we're not doing so bad. We're I've always been told that once you kind of get yourself to where you're just kind of breaking even, then it's just a few tweaks from there, and then you can really make money, right? And I've had times where it was like most of the time I break even and then like a crash and burn. Now I'm getting to, I'm a little profitable, but then I don't crash and burn, but I take much larger loss than I should. And that just kind of gets me to break even. So, hey, we're good. We're doing well. We're making progress, right? There are people that track trends on orders, and that is where your algo stops working. Well, I don't even know. So, like, the thing is, remember, this was really interesting. Who was it that said this? Oh no, it was in Igor Halperin's book. Oh, who does he work for? I think he works for Fidelity. Maybe I should. Fidelity has offices in Salt Lake. Maybe I should go work for them. What do you guys think about that? I've been thinking about that I should just go get another Wall Street job. I think that I know stuff now that could be really, that now they're pushing down. Now they're pushing rates even higher. After that initial, it kind of seems to me like there are some traders out there that they just want to fade any move, and I don't know if they really even care what's happening. I don't know if retail is giving algos enough liquidity to chase, but I don't know. Well, okay, so anyways, I've thought maybe I should get a job on Wall Street. It kind of makes me a little bit nervous because, number one, I would probably have to move. Maybe a lot of people are opening up offices in Miami, so maybe I could go and live in Miami and that would be okay. But I'd have to move and buy a new house and deal with all that sort of stuff. It makes me super, super nervous. It makes me, I don't know if it will work. And can I convince my wife to do it? Because she's, that's going to be super scary for her. I don't know if it was going to, but I think I could make a lot of money now with the stuff that I know. I knew nothing when I worked for them before, Miami is your hometown? Cool. It sounds appealing to me, but I don't know if my wife will be into it. Anyways, Igor Halperin, he wrote a book, and he is great. I think he works for Fidelity. And in his book, I'm reading his book. I read through the first chapter of the book, and I'm like, okay, I'm into this. I understand what you're talking about. I can't do this stuff myself, but I understand what you're talking about, and I'm really excited about what's going to go on in this book. And you get to the end of the chapter, and there's like exercises at the end of the chapter. I can't do these exercises. This is like, I think that there was a math class that I missed that's a prerequisite for this course, you know? But in his book, he talks about the generational algorithms. Remember, we used to talk about that here on the stream a lot, that we'd say, well, there's these algorithms that will go and backtest like 1 trillion different strategies during the night and figure out what works best and then use that the next day. And okay, so if that eliminates all of the edges, but that doesn't eliminate all edges all the time. So really what you have to do is you have to figure out the metagame of what strategies the algorithms are using right now and what they're going to flip to and all of that sort of thing. There are people that kind of try and track these sorts of things, like different types of strategies that hedge funds use and which ones are doing well and which ones don't. Maybe you could sort something out like that. But in his book, Igor says that that was a really big thing for a few years and those firms all died, is what he says in his book. So are the algorithms tracking trends amongst retail traders so that they can trade against that? Maybe. But I don't know if it's really worth it to them anymore. But that's the bigger thing, though, that I'm trying to teach you guys, is that they don't have to do that. The market maker doesn't have to do that. All he has to do is keep himself in line with current value based on a correlated asset and account for the probability of informed trading against him. So all he has to do is look at the volume that's coming in and he can do the optimal thing. So the only way that you can come in and beat him is if you really know what's going to happen. You know that more orders are going to come because you have a piece of information before everybody else does. That's really, when you think about it in that context, that's really the only way that it works, right? Now, how do you develop that kind of an edge with technical analysis? Because it's so much easier for the robots to eliminate those edges. It's easier for the robots to trade that sort of a strategy in the first place. And because they're so small, they're able to wipe them out of the market very, very quickly. So what's the alternative? You got to go for the informational edges that the robots aren't very good at. Really, right? It's hard. So yes, algo trading requires extreme skill. Doing it on your own and having success with it requires extreme skill. I've never spoken to somebody. You know what's so funny is we sit here in there's like these different levels. It's actually I got to tell you, because I'm everywhere and I'm really good at like kind of connecting two things together and seeing why they're relevant together in ways that most people don't see, just because that's the way that my brain works, is it makes those connections. And it's, it looks at everything, even if it's like really stupid. So there are these groups of people in the trading industry that don't really know about each other, essentially. They're all going off of their own thing, and they've kind of become siloed in their own bubble, and they don't understand what the people in the other bubble are doing. So there's this price action bubble in particular, right? Where they have these ideas about how things should move based on price action. And their whole thinking is, oh yeah, it totally works. It's just that then I'll do something stupid and I'll blow the account. Okay. The reality with price action is that almost all of the price action strategies involve adding risk, and that's where the profits are really derived from. And so it's almost inevitable that at some point you will blow your account, and you're just blaming it on your psychology. You're blaming it on your psychology and maybe the psychology has an effect, but the reality is that your strategy is prone to it. I think that my strategy is prone to the risk to some degree too, even though I'm very much keeping equal risk reward and everything, but it's just the nature of futures, right? Meanwhile, there's the algo trading subreddit. Like there's the main day trading subreddit, they're all price action. Then there's the algo trading subreddit. And you know what the algo trading subreddit is? The algo trading subreddit is, man, this is really hard. I can't seem to get anything to work. I've tried like a trillion different things and none of it works. And then, they have a thread about it, and there will be people, there's more of these guys in the algo trading sphere. They'll come in and, they work for a firm and they'll say, well, we did this and we did this, but those are all things that you can't do. Yeah. Could you have success algo trading? Yeah, you could. I haven't met a retail trader that just learned it all on their own and came up with a really effective algo trading system. Not in futures, at least. I think maybe we've seen some that are doing this in options and stocks. Could happen. But in futures, it's really effing hard. And it just kind of keeps coming back to this whole thing that like markets are very statistically efficient. They're more statistically efficient than they are informationally efficient. So you can try and trade the informational inefficiency. There is theoretically more edge available to you, a retail trader, in that arena. Is just that there's also a lot more randomness over there, right? So that I think should really, just that framework alone really gives you a good framework to think about your strategies, right? One, I need to rely on understanding what's going on. This whole idea in technical analysis is that you just need to look at the chart, don't look at anything else, because that will bias you. It's nonsense. It's nonsense. The people that have had success from technical analysis, there's a good chance that their edge was really actually the things that they understood about the market at the time. Right? But it also means that really, when it comes to managing your risk and everything, that you've got to approach it really differently. You can't just throw everything in on one trade, because there's a lot of random stuff that's just going to, even if you know everything that's going on in the market, right? You're really keyed in, you've really in the zone, et cetera. There can still be a large meta order going completely contrary to everything else that there is no way that you as a retail trader can possibly know that it's going to happen, and it will completely break it. It'll completely break it. These they're just random, right? So you've got to trade accordingly to that
on Wednesday,
right? And that means that if you're going to be successful in day trading, you're going to have to do it for a long time. You have to understand a lot of what's going on, and you've got to be in it for the long haul, man. You've got to be sitting here saying, yeah, I'm going to trade all year. And it may be that it's 1 month that actually gets me in the black and that I do really well on and makes it all worth it. Right? And that there's going to be a lot of setbacks along the way. Spitting facts things. It's hard. It's really hard. I'm excited to make this video to make a video response to Daniel, because, oh my gosh, there's just, it's all those little things about algorithm. That's the thing that's hard about algo trading too, is that, there's all of these little things that, especially as a beginner, you might not think about. Like the biggest mistake that I made when I was doing algos was focusing all of my efforts on non-time based bars. I really liked range bars in particular, so all of my algorithms were trading on range bars. And then I would, try and run the algorithms on sim, and they never performed the way that they were supposed to. And why is that? Well, because when you backtest on a non-time based bar, it tends to bias the algorithm towards taking trades in locations that you would never be able to get filled. Like by the time the algorithm has even done computing it like the opportunity's already passed. And, I'm sure that lots of people fall into that trap. When I started switching over to more time-based bars, then I started getting results that were more looked more like what my backtest was. Why futures are perfect for developing algos? I am using futures data for data analysis, and it works pretty well. Data for options are more difficult for me. Yeah, this is something about the industry that I don't really understand. Is that it seems to me like, especially if you were doing like an order flow thing, that futures would be a much better space to try to look at the data, because you've the kind of data that you get is good. You can just collect it yourself. But the academics tend not to do that. The academics are more interested in data sets that they've gotten from stocks. But I think that a lot of educators I see discount the impact of tech and latencies involved. Yeah, that's true. There's some people, one that maybe I should talk to him, just because
environmental economics and politics.
he clearly knows what he's doing.
No text or Q&A.
I can't remember his name, but he posts as Kevin Dog on Futures IO. I don't know if he's ever been here, because I think his name seems awfully familiar every time I see it. So I think he's been in our room before and we've spoken with him, but he very clearly understands what he's doing with the algo trading, and he's gone and done all of the tests and everything. I don't know how his systems really actually perform on my standards, though. Like, the problem that I continually run into is, like, I read something and I say, okay, well, like, you did backtest, that's good, but what does it do over a 5-year period, right? But I think that all of the little things that I've seen him share, those probably are true, but then the question is, if you combine it all together, does it really make money on a 5-year period? I'm not sure. But he seems like he could have some stuff to share. But to getting back to Tobias, I'm being really ADHD today, aren't I? Well, part of that is because I'm really worried about taking on risk today because of what happened yesterday.
Surging energy prices are a main inflator driver.
Well, it's very curious the way that all of that reacted to the news. I think that the gut reaction was probably correct, although maybe excessive. For them to turn back down lower kind of makes me think that the market doesn't care about that particular piece of news, that they're doing what they're doing regardless. What about a standard based on the number of trades, though? I think that's a good standard too. And the size of your stop loss. Well, so where you kind of run into troubles is the kurtosis of your strategy, right? High frequency strategies tend to have more kurtosis. They tend to end up being these things where, you tend to win most of the time, but then when you lose, the losses are bigger, or they can be clustered. I think that's what happens to my strategies. What happens to my strategies is the risk reward is equal, but the losses are clustered. So when you look at it on a daily, you won't see on the individual trades their kurtosis, because they're all either I make 4 ticks or lose 4 ticks, or, I make 10 ticks or lose 10 ticks, right? But when you look at days, then you see the kurtosis. You look at days, you see, okay, most days I make $20, but then there's this cluster of ones where I lose 100. And that's where it kind of comes break even again, right? So the more kurtosis that you have in your strategy, the more samples that you need. So especially these guys that are like scalping, like I've seen a bunch of people lately that come in with, okay, here's my algorithm and it took like 80 trades. It takes like 80 trades a day. Well, dude, that's something that you need like a minimum 10,000 trades to train verify. Tens of thousands. But I'd say that 10,000 trades is about on par with 5 years of data. Like if you've got like an average strategy that is taking 2 to 3 trades per day, then after 5 years you're going to get 10,000 samples, generally speaking. But I don't know. On the other hand, I also think that a lot of the algorithmic work out there is not done on futures because they view there being more opportunity in other things, right? Like there's definitely more opportunity to make money from managing a large portfolio. Once you get large enough, you really have to maintain a portfolio of a bunch of different assets to make any kind of reasonable gain on your
5 minutes
assets.
time now.
Otherwise, your trades are just too big and impact the market too much.
However,
So there's a lot more algorithmic work out there on an optimal portfolio than there is on what can we derive from the futures market that would help us, right? But then the other side of that is that I also think that part of it is that the algo traders realize that there's a limit. There's quite a limit to what they can pull out of the futures. Except for Renaissance. Renaissance knows something, man, that really helps them on futures. But 80 trades will make your broker happy. The other day, Nasdaq Killer was talking to me afterwards, and he said, well, don't, because I'm mad. I lost $100 this week. I know $100 is nothing, but it frustrates me a lot. I really take these things, like, they really can bother me. Usually when I don't know why this is. I wish I was like this all the time, because I've had some periods where it's been really hard to be motivated and stuff. The ADHD really gets to me. Yesterday, taking the loss, it was good. I did stuff. I didn't go into any algorithmic trading or anything. I'm kind of have some roadblocks there. I think I fixed one problem. Yep, I did. See over here? This chart right here is it's exporting data. No, not that one. Where did it go? This one in the middle right here. This one, it's exporting data so that we can use that. So we should get a good data set today that we can try and run some machine learning algorithms against. Anyways, so I didn't do any of that, but I just did, like, I replaced the light over here. There's this light that whatever it was that they put in, it was like a cam light, just like didn't work for very long. So I replaced it with some bulbs that I can plant. I think the next thing I should do with those is I should try and make ones that I should try and get some bulbs that are colored to see if I can point them at the corners to get this blue lighting effect behind me without having to have these lights on the floor, because the dog for some reason likes to sit in front of the light and it drives me crazy. I don't think it's good for him. And so I did that. We went and got a new weed eater, and I put that together, and I put up some curtain rod. Like, I did a bunch of stuff around the house. It was just like the loss somehow gets me motivated. Like, it kills the decision making, but then it makes me work hard, right? There's no way I would get to where I am today if I had just started having success at the beginning, because the failure is what drives me to go in and find this more advanced knowledge that I think that most people don't get to, you know? What are you saying about what is the stop loss though, and which market? I bet you $1 million that no one can make it on a 15 tick stop on NQ. Probably not. There's definitely this thing too, like how big should your stop be? Completing tasks doesn't feel good to me. I don't get anything from completing tasks. I did all of this stuff, and then that stuff isn't satisfying. But what is satisfying is trying to when you find something new. What is satisfying to me is the variety. Variety is the only thing that really gets me. one of the problems that I've had lately is, it used to be games. I would play different games, but I was really more into shooters, and the shooter market has just kind of like gone dead lately. So haven't had a whole lot on that side to keep me busy. The dog, I tell you what, the dog for a good, when did we get him? In February? No, we got him in March. So that was a good 2 months there where the dog was like really got the things good. But now I've got to the point where it's like, okay, what new do I need to teach him? What do I? He's going through the teenage phase. My wife is getting really mad at him. Dude, yesterday. Oh my gosh. So I don't know why they bought. Oh, I remember. This is going to seem like a really weird, convoluted story, and there's no point to it. Okay, so just don't be disappointed when there's not like really a payoff at the end of this. Okay, but it was effing hilarious. Okay, we have a chicken that is having problems. The one we had 2 red hens. One of them died. The second one has been egg bound the past week. So my wife has been really concerned about it. So she decided to bring the chicken in and bathe the chicken. Because apparently if you have the chicken soak in salt water for 20 minutes, that can help them pass the egg. So she went and got this bucket, one of those big plastic tubs to put the water in and clean the chicken in, which by the way was gross. Like we went through two buckets of water, and the first bucket, the water was so gross when we poured it out. Man, chickens are dirty animals. So this bucket that they were using had a bunch of toys in it. So these are toys. They're probably more like 4-year-old toys than 2-year-old toys. But my son has had them all out on the floor and playing with them. They're like Fisher-Price style action figures. They're actually really cool because like every single one of them does something. Like almost all of them will shoot discs out. And then they've got a bunch of these planes, and all of the planes have like triggers on them that make them move in some way. It's really cool. They're really cool toys, and the boy has really been enjoying them. But it means that he's got all of these toys and action figures out all over the place all the time. And guess what? The dog loves to try and chew on them. So anytime that she sees him, my wife sees him touch any of these, she gets really, really mad. Well, and of course, what she tries to do is tries to catch him and take it away from him. I spent a bunch of time yesterday trying to teach him to sit and stay and let us pick him up and not run away. He was getting better at it last night, so I need to keep that up. But at this moment, he was running away from her. She's pregnant, and she kind of hurt her back yesterday too, I think, from being pregnant. So she's trying to chase this dog, and it's a Papillon. Like they're fast. They are fast and nimble. It's hard to catch him. You can't just catch this dog. You have to like corner him to catch him. and the baby is trying to catch him too. He sees that mom is trying to catch the dog. So he's trying to catch him. But really what he's doing is he's actually like getting in the way anytime that my wife is like close to catching the dog. And I'm like in the middle of eating, like I have food on my lap and everything. So I'm just sitting there laughing. She didn't think it was funny, man. But eventually we caught him. And then I was like, okay, let's do some training now. And the baby would not leave me alone while we're trying to train. So she took him up to sleep. And that was last night. Man. You use Elder's Zone for stops and it's pretty useful because it counts on volatility and you can easily automate it. Oh, that's good. You know what though, Tobias? Anytime that I've tried writing an algorithm where the stop was based on volatility to some extent, it didn't work as well. I don't know. There's this whole thing that it does like there's a certain amount of noise in the markets, and to really get anything out of it, you need your stop to be larger than that. But volatility is an options thing is really what it comes down to, right? Volatility is an options thing.
Elderson says weak hitting.
If you have your stop too tight, then it basically guarantees that your results just become random. But, you know, maybe that's just because when you have the stop so tight, you get more data samples. Papillons are cool. I've seen them do a clap their paws movement that someone trained theirs to do on. Really? Well, I've been trying to get him to roll over, and I think I was starting to have success yesterday because can get him to turn his head all the way, and I was starting to let him put my hand on him first so that I could just flip him. And so I was able to get him to roll over for me doing that 3 or 4 times. So that's progress. I hope that works. Anything else that I do, I mean, if it's like a command and then he does something, so easy to train. Like sit was just perfect from the beginning. And I've been working on helping him discern between them and to stay. Stay has been hard, but I think he's starting to get stay. Anyways. Well, it is almost 10 minutes. I can't believe that was an hour. I used some kind of machine learning to calculate the best settings for the elder stop zone, but it's a little bit customized for sure. Well, when you say machine learning, you don't mean some sort of a forward testing thing, do you? You know, it was, so I'll share a little edge that I found with me that I thought was really interesting, because you mentioned elders. Elders is an interesting one. It was that the elder thing was something that I've seen some success with, but kind of seemed like that the edge had been pulled out of the market since then. But it wasn't elder stop zone. It was just like some sort of elder entry signal. I forget what it was. Anyways, and then all of the, what is his name? Euler. Like he's got the Mesa's strategy or whatever. That stuff is useful. I have to say, because what he did was he took all your standard indicators and he found ways of combating a lot of the noise and data collection biases. You know, like we have bars. Bars have, you know, where the high and the low and the close and everything is on that bar is very dependent on where your bar starts and stops. If you move everything over 5 seconds, going to change the way that the bars look. So this is called quantization, right? There's errors that are introduced into your data set based on how you cut things up, because you can't have a perfect continuous interval. And those all really help. Like the strategies that I've backtested using his indicators, every indicator that I've tried of his usually comes out to break even. And so sometimes if I'm able to combine that with something else, I might be able to find a little bit more out of it, right? And there was one that he posted more recently that I found somebody had put an indicator about it on the NinjaTrader 8 indicator share. That was a Fourier series cycle indicator. So basically it's this line that goes back and forth that basically tells you when the market is going to cycle and turn, right? And when I first started using it, well, not using it, but back testing it, I was like, oh man, this, you know, if I optimize this parameter, it works really, really well. But how do you know that that's not just a data testing bias, right? So a little bit of time goes by, I come back and I understand a little bit more about the forward testing and everything, and I forward test it, and it still works. So it seems like the cycle thing it is something that changes over time, but as long as you continue to forward test, it's consistent enough that you can pull some sort of edge out of it. It seems. So that's kind of like forward testing machine learning, right? But I think what I want to get into, or what I'm trying to do, is like these neural networks stuff, right? Yeah, you mean we use walk forward analysis? Okay. No, it's the neural networks that I'm trying to get into. So I think I have the model that I want to use. I'm gonna hopefully maybe over the weekend. Maybe this data set that I get will be good enough. Maybe if I have time, probably won't have time this week, and maybe it will be a next week thing. That I'll be able to go through and try and pass it into the model. I think what's going to happen though is I'm going to pass it into the model. I'm not going to understand the numbers that come out of it, and then I'll have to figure out how to get it to trade. But then once I figure out how to get something that will trade off of that, really I have to go back, because for instance, the optimization function in particular is going to be the real challenge, I think. Man, did I not take my allergy pill yesterday or something? Because my nose just really, really itches right now. Anyways, so what do we got? 5 minutes until the S&P 500 opens? Let's just come over here and look. That'll give me a chance to itch my nose here. So the treasuries all moved lower, and it appears that the spreads did not actually move too much. We saw really pretty much everything kind of moved the same way, didn't it? 6J. Bitcoin didn't move too much off of it. I gotta say, by the way, I'm a little concerned about what Bitcoin might do over the weekend, man. Because that move in Bitcoin was a little ugly. And I think that rising interest rates are only going to make it more difficult in Bitcoin. So there's just going to be less money around for them to use. Okay, corn went up. Oil was not really that affected, but is slightly down. So that's what was going on there. Zillow Group shares plummet amid a dismal Q2 outlook and rising mortgage rates. So that one just continues to be bad, huh? I had seen that it was down a little bit yesterday. That's the one where you kind of look at it and it's like, how much worse can that stock get? Because it seems like it's a solid website and they have a solid business. They're not making money from it still, even after they got rid of their home buying business thing. Okay. Is that a stock that's just going to go to zero? It could happen. Or let's see, I want to go to zero hedge here. It looks like a heavy market where it's an advantage too. Well, yeah, like when I look at this market, I started to feel like this yesterday, but now seeing the non-farms play out, I really feel like that. It feels like that there is a lot of activity that's happening here that is really just reflexive. It's like, okay, the S&P 500 had a little bit of a rally, so we're going to sell that. And it has absolutely nothing to do with anything that's going on. When I look at this, is an interest rate of 3.13, or let's put it this way. Is the market really justified in interest rates increasing basically 20 basis points in a week? Seems off to me. It's clearly there's not really a change in fundamentals that I see that really says that they should be changing like that. So I don't know what you do about it. Certainly, though, you have to start to get into the mode that, like, I mean, I think this is another thing that's really hard is we've always known that this day was going to come, but we don't know how to deal with it. That it's not it just always goes up market anymore. We're really kind of in a bear market / sideways market. And I think we could be in that for a long time. Like I think that the rosy scenario is that eventually we rally and we break the all-time high again, and then we go through another quarter or two of difficulty. You know? It'll be like periods that some people might think of it as like separate cycles, but really it's just like a long, prolonged period of volatility. Sell calls. and the options really are been zany. Maybe with interest rates rising, the number of people out there trading options will be reduced and the volatility will chill out. I can only hope, because some of this stuff is just starting to feel it's a little zany and it's exhausting. Dude, yesterday I was so tired after that, can't believe you've only been up for like 2 or 3 hours and you've already like used all your energy for the day. That's like, I think, kind of what happened to me yesterday. What are the chances of a rally to an all-time high before the end of the year? I'm going to put it at 45%. I think a 45% chance of a rally to all-time high before the end of the year. I think that there is a scenario where the market shrugs off this near-term weakness that we've had at the beginning of 2022, that the consumer remains strong, and that before the end of the summer, they turn mildly bullish again. And then it's just a question of, do they get far enough before like further supply disruptions from China and zero COVID policy over the winter hits them down again, right? Action that we're seeing today, though, doesn't really support that scenario, does it? The action that we're getting today kind of says that they're just going to continue to be very, how do we say, uncooperative. What was this guy? Oh, okay, I see. Moved around some of my charts and they're not all perfectly lined up. Not that I'm OCD, but it kind of bothers me when they're not perfectly lined up. I wish that NinjaTrader had some sort of a grid so that you could just perfectly line all your charts up. That would be great, but you gave it 0. Russian oil ban will be like dropping an atomic bomb on Hungary's economy, says Orban. April payrolls rise more than expected, but wage growth slows and participation rate drops. Well, the wage growth slowing, though, is a good thing, right? What was that? I had missed that in the numbers. Average earnings, 5.5 versus expected 5.5. Average earnings month over month, spot 3 versus expected spot 4. So we're back to like normal behavior. The market should be happy about that, but I guess they don't particularly care. Rabobank, the last thing the polarized US needs is a spike in food prices and a collapse in 401ks. It'll probably get both. Okay, dude, if people's 401ks collapsed, that could be. This is something that bothers me. You want to know like the sorts of things that might keep me up at night? This is one of them, right? When you think about a regular strategy, right? We think about their win rate and the risk that you're putting on, right? The more risk that you put on compared to your reward, the higher your percentage win rate will be, essentially, right? more risk you take on, generally, the more money you can make, but the greater your chance of ruin, right? Well, you can take this to the
We
extreme.
need a new global.
The extreme is
crypto.
I will have an infinite stop. I will take on all infinite risk, right? And I guess theoretically that means that your win rate should be 100%. But if it isn't 100%, you're going to lose everything, right? Well, isn't that what we're doing with our 401ks, right? You're putting all your money in there. You're taking on ultimate risk because no matter what happens, you just buy and hold. And you're betting everything on that. Like the chances of it breaking is theoretically 0. But if it does break, you're going to lose everything. You gotta remember, index funds haven't been around forever, right? We got this first set of people retiring on them. My parents are retiring soon. They've moved a lot of their stuff out of those stocks, so no matter what the stock market does, they should be fine, right? But that's not going to be everybody. Can you imagine indexes just completely collapse? Indexes just completely collapse, and maybe let's say that you have like an 80% drawdown or something like that. I mean, come on. Some of these are. A lot of these individual stocks are already 50, 60%, right? You could see people that they have an 80% drawdown in their retirements. How bad that would be. And then on top of that, you spike food prices up. Yeah, that would be bad. That would be bad. Bitcoin will keep your 401k. Oh, you mean that other asset that is also down 50% on the year? You know, there was a study that was released earlier this week where these guys did an analysis of the trades and everything, and they basically determined that the majority of Bitcoin investors have lost money off of it or are negative at the current time. Yeah. And there's kind of one of those things is that you think, oh, well, they just have to wait long enough, right? Until the next bull run. But what you got to understand is that the next bull run can't happen until everybody's been washed out. That's what always happens, is it's literally everybody that's available to be washed out gets washed out. Then it can move up. Global reset. Well, I want to break these markets are getting so exhausting. It's so exhausting, man. I'm gonna need to take some extra R&R this weekend, aren't I? I haven't really thought too much about what my plans for the weekend are. Nope, I remain eternally optimistic. I think that the consumer looks strong. I don't think that the economy is so bad. I think that the negative sentiment that we are seeing in the stock market right now is completely out of kilter with the reality. The S&P 500 is starting on a pretty aggressive sell campaign here on the open, isn't it? In fact, we may be to the point where in the treasuries we are seeing a slight bid as a flight to safety. And gold moving around a little bit there, but then resolving down. Oh, let's reset this. Well, so apparently there is a lot of volume, relatively speaking, in Bitcoin today. And they're pointing down. Man, is Bitcoin going to have another dismal day? They're getting close to 3,500. 3,500 is where I think things really kind of start to fall apart. My eyes are falling off. I'm just not trading today. I don't think I'm gonna. I'm not sure I understand what they're doing here. Plus, you know what? How many times have we traded like non-farms payroll, and then like nothing behaves the way that it probably should. You know, like sometimes just weird things happen on Fridays. Yeah. And we're reading this story real quick. Overall, the April print was Goldilocks, with modest upside strength in the headline print offset by modest wage growth weakness. Then again, at 5.5% annually, it will take a much bigger economic hit to reverse the wage price spiral than judging by the market reaction, which saw 10-year yields initially dip only to spike back to over 3.1%. The Fed has a lot more selling to do before wages stabilize back to the 2 to 3% range. I don't know if that's agree with that. Pray for Michael Saylor. You know what? I really hope that Michael Saylor. I hesitate to use the words about what Michael Saylor would do, but I hope he doesn't do anything to himself. Unfortunate if things were to go south in Bitcoin. I would like to see him sit trial for the stupid things that he's done and rot in jail. That's what I would like to see. Because this guy is just like straight up trying to run a Ponzi scheme with Bitcoin, man. And he's just trying to get everybody to buy into it. It's a total crock. And he did this during the .com bubble. Like he somebody needs to have the book thrown at it. If the Bitcoin market collapses and it causes problems, somebody needs to have the book thrown at them, and I hope that it's Michael. I hear that, yeah. You think it's definitely going to 21K? It's, yeah, I definitely see some weakness here. Like, I thought that a break of 40K again, could push us to the 3,500 and then down further. So I suppose that the market is kind of starting to play out my scenario, but I'm still a little bit skeptical about it. I'm still kind of seeing this like it's coming down to 35, and I'm seeing it like, this is being resilient. It's being more resilient than I would, I just want to see Bitcoin fall apart and it being catastrophic. And, that's always fun to watch. It was fun to watch last time, at least. That was one of the most fun days. I don't know. Hold on here. So there was, when I said, oh, maybe they're getting a flight to safety bid, the treasuries came up there really quickly, actually. They're not quite back to 118, but they look headed there. S&P 500 is taking a break. So we'll see. But for me, should I add at some point? Well, if I had added down here, that would have been great. But I think that opportunity has passed, and I would be a little concerned about some rebalancing behavior at 118. So I don't think that would be a very, it could work, but I don't think that would be a very optimal place to try and add to something. Let's see here. Bitfinex says something must be catastrophically wrong with Tether now that Tether's largest customers are resorting to creating new dollar fraud Ponzi tokens, especially when those customers are admitting to facilitating Ponzi scams. Maybe Tether can't play ball anymore? Was it 21K that he gets? Oh, yes. But I think that some people were not reading the story because what he was saying is that that's under the current conditions, and that he would just have to put more collateral behind it, like collateralize more of their Bitcoin to be able to hold it. So I think what he was trying to say was that they can't force him to sell. I beg to differ. I think that if Bitcoin comes down to 21K, that MSTR's stock is going to get hammered so badly that at some point, you know, that starts to unwind. You know what I mean? I think that that's how it happens. Is it will be through MSTR's stock price. Have you seen Ray Dalio's case? Well, he's sure on a PR crusade with that, with his book. When I see the stuff that he's put out on there, it looks like he has a lot of good research on it, but at the same time, I also think that they're making the same kind of like technical analysis mistakes. Like, well, this is a pattern that's held throughout human history. Well, okay. Maybe it's just random. Probably don't have enough data samples to really know. I think that the world is moving into a more multifaceted power structure for sure, though. It's not a world where the US is the only real superpower. It's not even going to be a world where it's like the US versus China. I think that as we go into this further, that other countries will have larger roles to play. I think a good example here is India. You know, we don't talk about India very much because they've had a hard time getting the economic engine rolling, but they do have some very smart people in India. Their middle class is growing. It's not like it is in China, but you know, eventually they're going to come in and play a role. And you can see this back and forth between the US, China, and India over, you know, whether India does sanctions against China, and all of that kind of says that what they do matters, right? So we're going to see a much more multifaceted world. I'm not all in on this idea because I think the bigger call here that people are trying to make is that the dollar is going to collapse and that the US's hegemony around the world is going to collapse and the United States will fall into disaster. And I don't see that happening. In fact, everything that we see kind of suggests that the dollar remains remarkably strong. Like, I'm kind of tempted to go and see. I want to. I'm on an anti-Bitcoin binge now because it's going down. That maybe that means that we're not going to get anything about it. But some of the worst down moves in Bitcoin happen when it's falling into the weekend, right? And then over the weekend, they just get savaged. They just get savaged. Do you really believe that the next generation of Americans will be able to compete? I do, or at least I think we have the opportunity to. I think that the Western system is really whoa. Okay, hold on a second. We just saw the 10-year Treasury tick up 2 ticks, and then a large 2K order show up below it. Now that large 2K order canceled, and they actually ticked back down, but then they immediately ticked back up, and they're holding O2. So that was right about at 3.1. I was right about at 3.1. So is that giving us an ignition signal that the treasuries are going to push back up to the highs now? That was wild. I haven't seen stuff like that in a long time, but we keep seeing that order. It's, in fact, I can pull it up here. It's the same thing, right? 2,000 bid at 0.5. Yeah, the average price of around 3,200. Well, it's not just MicroStrategy, right? El Salvador, their average is somewhere in the 30Ks, right? There's a lot of big fish with positions in that area.
10 minutes time now at 10 a.m. Eastern time. We get the
Oh,
Canadian
I'm sorry.
IP
You
PMI. Saw a
shouldn't be
prior
hearing
read of
that.
74.
Oh, man. Oh, yeah. In the Bitcoin subreddit, they're just making fun of it falling down here. I also think the Chinese education system is completely broken as well. All the intellectual and rich and Chinese people still study overseas. Oh yeah, good. Thank you for reminding me, Captain Price. When is the next Fed speaker? Because one of the issues that we got today is that there's like 4 Fed speakers. Okay, so the first one that we get, we already had Williams speaking. But then we got Bullard and Waller in the evening. Okay, well. Let's just see how it goes. They're looking really good here in the treasuries now. The 10-year hasn't broken out above the news price, but we are kind of getting some activity that suggests that something is going on. Whether that something is pushing back up to those highs or reversing down and busting the lows, I'm not sure. I'm not quite sure what will drive the order flow today, but they are doing all of the funky business. Nah, I think that there's somebody in the 10-year treasury is coming in and has decided that they're going to spoof and fuck around with the market and try and get away with it. And I don't think that they're going to get away with it. I bet you that a month from now, we don't see that order anymore. Well, look at that. They pulled back a little bit and immediately back up to high. I'm tempted to bust my live account out now and try and sell it here. Well, what could I do? I'm like even if I made $50, I'm not going to hold it over the weekend. Oh, there I am hearing something from this Fed speaker now. Well, the S&P 500 has definitely been on the sell side, right? Look at this. I kept that thing on, so it says it's a 17K loss. They came just short of where I was going to take a bunch off. But the treasuries are getting a really strong bid, so it seems disconnected from what the S&P 500 is doing. So is it just the treasuries doing their own thing, or are the treasuries getting a flight to safety bid because the equities look so bad? Unlimited loss, yeah. One of the things that I do, you know what? Listen, it's all on like an experimentation account. I don't care about it. Let's just take that one off, because the temptation is to think around and not focus. And even though this is a sim trade, this is kind of like the second kind of CTA strategy trade that I've really tried to put on. So I think that it would be good for me to babysit this a little bit. Yeah, teaching bad habits. When it didn't get the 50K, that one in the ES I should have taken off, right? Yeah, there has to be a reason, and the real reason that I hadn't done anything over there was because I just wasn't watching it. Yeah, if you shorted ES with owning it, you're up near like 200K. Yeah, it really is insane to think about. But the thing that I think is so funny and ironic about it, okay, when you see a trend, like a trend day like yesterday, like especially if you're a beginner, you're thinking as well, this is the easiest thing ever. All I have to do is just go short and just hold it all day, right? I think that those of us that are more experienced understand that trying to hold something all day like that is really, really difficult because most days aren't like that, right? But the more vicious thing about it, the thing that's just like so sinister is that the vast majority of people didn't do that, right? The vast majority of the volume is down at the bottom, not at the top. Very few people caught the top. Very few people were thinking about selling it then. And even when the momentum started going, very few people did. Like if everybody had been doing that, then it would have gone down faster. You know what I mean? So like the very mathematical nature of it is that by and large, the vast majority of the day traders don't catch the move. I haven't looked at this charts all morning, but going off the comments, yeah, the S&P 500 is down about 90 points right now. I would rather lose based on knowledge than lose based on a lack of knowledge. Yeah, I mean, the best thing is to know everything that it's possible for you to know and make a trade based on it. And if it randomly just doesn't work out, then there's nothing you can do about that, right? That's the best you can do. Well, the 5-year broke new highs, the 10-year hasn't. It's quite an aggressive bid in the treasuries there, by the way. Buy new highs and sell new lows. Oh, I don't think that works either. I've backtested that one, actually. I did a backtest that was like, okay. No, we did it here on the stream, remember? I think I was actually able to optimize something that looked good, but I wasn't able to get something that worked in a forward test, so in a walk forward test, so I kind of decided that I could see why people might think that it works, but it doesn't look like it actually works. But the setup was basically like if you broke a new high and it had been so much time since the last new high, then either try and buy into it or wait for it to go through and fade it. And they didn't really work. The markets are not random. Well, but you gotta, what is random, right? This is kind of a philosophical question. Some people would argue that nothing is actually random, right? There are some people that think that the universe is deterministic. They think that even things at like the most quantum level are playing out based on rules, and that if you had enough information and you knew all of the rules, you could 100% predict every little piece that comes through, right? So to some extent, some would argue that nothing is random. But I think that in order to avoid having to have that conversation, in order to avoid having the philosophy around it, What random really means to us is that we have no way of predicting it based on the information that we have, is what that really means, right? The stock market doesn't just move. Every move is driven by orders. So none of it is like random in that respect. It's all driven by orders. But why did those orders come through? For all we know, it is random. Like if it was random and if there's a really good reason for it, what would be different for us? Nothing, right? Because we don't have enough information to know. Now, we should always seek to try and find out, even if it's after the fact, because then maybe potentially that might be another factor that we could look for next time. But I've been going through that and I've looked through like every little thing that we can have. And I think that this is a situation where we just don't have the edge. You know, like I'm looking at it just right here. That was like a really strong uptrend, wasn't it? It really makes me want to go with it. In fact, when that big bid came up at 02, that was a little weird. I was a little suspicious about it, but I was still leaning towards buying it. That was like, well, I think you buy that, but I think we should be suspicious about it. It ran through. I think that you could have made $10 on that. Would that have been worth it? Maybe. But I didn't take it because one, I think I'm off. I definitely think that yesterday I was on tilt to some extent. You know what? Something I did yesterday was after the stream, I was like, well, I kind of want to put another contract on. And, but it ended up being sim. You know, I forgot that I had switched it to sim. So it was a sim contract. And then I was like, wait, why would I even think to do that? Because we're so far down here. We're in the chop zone. It's, you know, if it goes further, you're not going to get paid for it very much. And that was, in the end, what happened. It was correct. I was like, there was really no reason to trade it. So I feel like I'm on tilt a little bit. But then I feel like I don't understand this market very well. I don't understand what's moving them. I don't understand where they're going. There's too much stuff going on. So if I don't have an edge, then really I just need to stay out, right? Sucks. But that's just the way that it is. Well, you say flattening here, too much interest here? Oh, I see. You mean that you are getting out of a position. What I'm seeing, by the way, can I show it here on a chart? Important development, let's say. They can figure out what I did with my chart. Good grief. Oh, a bit. Yeah, okay. Yeah, we're fine there. Yeah, ZB. Well, it's not actually as it's not actually as clear as I thought it would be, but like we have definitely been steepening, right? On all of these big moves that we've had, they've been steepening, which I guess is a good thing in the long run. The steepening is a good thing in the long run, but that's when it kind of turned into, well, but it's a little odd that they're steepening even as the interest rate is rising above 3%, you know? There are certain things that are very important that you know, but there are other things that aren't, that have negative impact on the positive things. Well, let's just say that there's lots of pieces of information and any of them could move the market. But I think it's more than just that though, NASDAQ trader. Like the thing is, number one, there's a bunch of things that could have an impact on the market. And it's difficult for us as retail traders to know how many orders those things will actually trigger, right? How many things will those actually trigger? It's kind of hard to tell sometimes. But the more problematic thing is that the largest forces in the market are completely disconnected from the fundamentals. That's the bigger problem, is that these large funds, they have rules. So I'm not saying that it's not predictable. It's just it's not predictable based on, you know, looking at a chart or understanding the fundamentals. You have to understand how their strategy works and like what their current positioning is and what the performance was over the month in order to sort out what kind of rebalancing things they're going to do. And there's so many different funds, you know, and this is a world that we as retail traders know very little about. So that I think is the largest challenge. Oh, this big guy is showing up at 08 now, huh? I think that that's the largest challenge, is that the largest players, their actions are just completely disconnected from fundamentals. And the markets, as a result, are extremely inelastic and inefficient on an informational basis. That's the challenge. But how do we deal with that challenge? We have to be selective. I was not selective yesterday. I don't know what's going on. How can I sit back and say, like, I lost $100? Well, it was $80 yesterday. I lost $80. I don't know what's going on. Then why were you trading, Seth? Why were you trading? We should only be trading when we really feel confident, when we really think we know what's going on, when we really think we have something that's going to predict future orders. That's so hard because sometimes you really think you do. And I guess yesterday I thought I did, but just in retrospect, I didn't, right? Yesterday I thought I did because, you know, well, it's the FOMC. They're trading at the day after the FOMC. That's what I thought. And it's clearly more complicated than that, right? And I think that next time around, I'm going to be way more cautious on the day after. I've always come in and been like, okay, like I'll wait, you know, we'll avoid the FOMC, but then like after that we can trade that. Now I'm starting to go, oh, actually, that whole period afterwards has a lot of random stuff that we don't understand. So maybe it's best to avoid it, I think. Yeah. That's how we have to adjust for that. Number one, you believe the volatility is bad, yet your best trades happen because of your worst trades happen because of a lack of it. I don't know if that's accurate though. My worst periods of performance tend to be when market volatility gets really excessive. I don't remember. I don't want to go back and relive it, to be honest with you. It sucked. I remember I took that one trade in the 5-year at the beginning of it and rode too much of it and then tried taking the reversal. So those two alone was just like, you know, and by that point it was like, oh, actually it's a trend. It's a really strong trend, you know. Probably I should have realized that sooner, but yeah. I think this comes back to this thing that's like, you know, there was a bunch of things. I think the first mistake that I made was that we didn't get to sleep on time. I should yell at my wife about that because she hasn't been very serious about getting to sleep on time. I think today we did better, or yesterday we did better, but I don't think that the markets are disconnected from the fundamentals. The fundamentals for funds, I think that they have a look on fundamentals quite a lot, which will have an impact on their decisions. Well, okay. I don't think you understand what I was saying. Like, or, you know, I was kind of making a couple of assumptions about how much people were listening from watching the other day, but so let me back out. In order to predict where the market is going to go, we have to be able to predict future orders. And there are a number of things that we call predictors of order flow that we could potentially use to predict future orders. The most obvious the most obvious and commonly accepted predictor of order flow is changes in perceptions about future flows or fundamentals. Okay. So if we have an economic report, it comes out and it changes what people think about the future of the economy, and they trade based off of that, and we can use that to predict future orders. Okay. Right. That is one predictor that is a very, very strong one. Right. And that is the one that I think that we are using most commonly to try and trade off of. Right. But there is another predictor of order flow, and that is the hedging and rebalancing activity of large funds. And while a lot of those funds will make decisions based on those fundamentals, the largest ones do not make those decisions based on that stuff at all. Okay. Like Vanguard, how do they make decisions? How many people contributed this month? How many withdrawals were there? Which stocks have gone up and which ones have gone down? Right? They're rebalancing to keep their portfolio so that it follows the index. And they have to take into account, they have to sell some if there's more redemptions, and they have to buy more if there was more, if there were more deposits, right? So all of those things, they can have absolutely nothing to do with the future of interest rate policy, right? Like if Vanguard is doing something today, it has nothing to do with what Powell said on Wednesday, right? It probably has nothing to do with what the jobs number was, And there's going to be guys here doing stuff that they were paying attention to the jobs number, but mostly it was like because they had a bet on or something like that, and they want the options to expire in a certain location by today, So that's where I'm saying some of the strongest forces are, for all intents and purposes, random, right? So that's why we really need to stay out unless we really have a good predictor of order flow that we're really confident is going to predict future orders, right? Especially when we get into this volatile market. Because what's going to happen in the volatile market is that, like in regular circumstances, I can be 50-50. I can have a 50% win rate, and my winners go further than my losers, and we're fine. When you get into the high volatility regime, that doesn't work anymore, because the amount that you're going to lose when you do lose can just be everything that you had just made. And that's what tends to happen to me is I'll do really well. Then we'll get into the volatility period. Maybe I start doing well at the volatility period, but it's very often the volatility comes in because I think like people don't know what's going on. They're confused, And then it's like one bad loss just kind of like eats away at you, and you start making not as good decisions, and it's just kind of one thing on top of the other, and it's a slow slide. Romney says Trump very likely to be 2024 Republican nominee if he runs again. I think he's going to lose. I think it'll be close. It'll be like dramatic, but I think he'll lose. So that's what I meant, right? And really the main reason that I'm saying all of that is because the big fallacy that retail traders make is they take one of two approaches. They either say, I'm going to use technical analysis and I'm just going to go off of the chart. But that doesn't work because the market is very statistically efficient. So then you say, oh, okay, so then I should trade based off of the fundamentals. Well, that doesn't work because the market is not very informationally efficient at all either. So even though you might be able to find an edge in there, there's no guarantee that the market's actually going to come your way on that informational inefficiency. So then that's where we come to this thing where we can actually explain, we need something that actually explains the moves, because fundamentals is not that well tied to what the over longer time periods it is, but not on an intraday basis. So that's when we come to order flow, because order flow is the only thing that can accurately explain what's going on. When you think about it, it's kind of like a no-duh. It's kind of like a no-brainer. Well, of course, the orders that get submitted into the market are what controls where the market goes, right? Of course, it's just like simple cause and effect. But once you start kind of tracing the lines back, now all of a sudden you see it. Oh yeah, if I'm going to make a system that has any chance of working, it has to be based on the orders. Has to be based on predicting the orders. Is there a part where you recognize retail traders have any advantage? Well, there is an advantage that you have, right? There is an advantage that you have, which is that you're small and nimble. So if there is a solid predictor of future order flows that you know about, and you're in a situation where you're confident that you have that, you will be able to get into it faster than these large funds and take advantage of it. And that's the only reason why retail trading can never work. You know, and once you get large enough, you have to go into different things, because there's a certain point at which you become so large that you move the market too much to take advantage of those, right? But for us on small lots, we can front run some of these things, right? It's just really hard, right? When you look at that, now it should make sense, right? Oh, okay. I can see how it's possible to make money day trading, but it's incredibly difficult, and the vast majority of people fail because there's so many things working against you, even though you've got this one thing that can actually make it work, right? Yeah, there are edges out there that funds cannot and will not take, and there's easy money, but a method has to be there. Yeah. Well, on a technical basis, there could be an edge that a firm finds, and it's not big enough, and they don't trade it for sure. But on that point, that's where we get back to. Oh, by the way, Kashkari is speaking. That comes back to the market is very statistically efficient on that one, right? I think that the bar for what you have to do to find a statistical edge in the market is way higher than what retail traders think. Like, I don't think that you're just going to go and use high school math and a bunch of indicators that come with the platform and find one. Everything that I'm seeing in here is like these guys that are math PhDs and statistics have a hard time finding them. You know? Doesn't mean that they're not there. It's just, it's going to take a lot of work to find them. And you're going to have to learn a lot to find them. And if you want to go down that path, I would recommend start studying master's level statistics. Retail's probably lost that race against quants, yeah. I don't know. But that's where I kind of come back to this whole thing that's like, okay, retail traders, I mean, so here's a question. How long has it been like this? Trading has always been hard. When I watched documentaries about floor traders, they still were saying, you know, the statistics are the vast majority of traders fail. 100 years ago, was that the case? You know, they talk about we retail, well, technical analysis traders, they're always super interested in Jesse Livermore, right? But the more I think about Jesse Livermore and kind of understanding what he's doing, I see somebody that there might not have actually have been any edge to what he was doing, but he just takes on enough risk that eventually he gets a string that makes him rich, and then he would blow it, right? He would blow it and eventually he killed himself. So like, has it always been this way? Has a retail trader always been that disadvantaged? And when you consider that the funds, the large institutions have always been there, you kind of start to think, actually, yeah, probably it has always been tough. Maybe not as tough as now, but it has always been tough to some extent, right? So if I'm going to come in here and I say, I think that in order to have a better functioning market, we need to throw retail traders a bone. Can I actually justify that? Like, I think that I would really need like a really solid study to say that if you do this, the market would become more efficient. Because that's ultimately what I believe would happen, is that if more retail traders were trading out in stocks, the spreads would come in, and the fundamentals would factor more into price movements. Because right now, the forces that are trading off of the fundamentals are very weak in comparison to everything else. But if we were able to get more retail traders in to actively participate as market makers in stocks, then maybe we could flip that around, right? So then that's where I say, number one, change the wash trading rules for stocks, and then make sure that we can see all the data, that everybody has access to level 2 data. Of course, they're going to have to pay for it, but make that available. And maybe you throw them a bone. Maybe if you're a retail trader, you get priority in the queue or something like that. Can I make that argument? I don't know if I can. I mean, in all honesty, the only reason why I think all of that is because I think that doing all of that sort of thing would make it easier for me to make money, at least. I don't know. What you going to do? But I hope that at some point, somebody at an institution, somebody over at Harvard thinks about that and looks into it. Yeah. So if you could see intraday interest, that would be really interesting too. But I don't think that that's really actually the golden thing. I've seen some evidence that shows that you can develop an edge based on knowing what open interest is doing, but I think that the thing that would really make this more fair is having the ability to see who is trading the orders. If we're coming in here and we're having a huge downtrend, and I see all of these market sell orders are coming from the Sovereign Bank of Japan, right? That would change things like big time, right? When they were doing floor trading, you could see that to some extent. You knew who was the trader that you were trading against, at least. And if that trader like screwed you over, played some sort of trick on you and really did something dishonest, then you just wouldn't trade with that guy anymore. And that kind of, prevented people from really being, you had to have good business relationships with the other people that you were trading with, right? But when we came onto electronic markets and everything became anonymous, it was just like what the internet did, right? Now you can just be an asshole to everybody all the time. So I think that the biggest change that you could make is if you could see who you were trading against. See, it would just be a number. Every order would have a trader ID attached to them, and a big block execution firm like Goldman Sachs or Morgan Stanley, that would be very detrimental to their business. So you know what they would have to do? They would have to contract it out to other people. They would have to say, okay, here's these traders that we know that are pretty good. This time we're going to give it to these guys to execute. so that people in the market don't know that it's Morgan Stanley. That's what they would do on the floor, right? And then maybe you guys, small people, would maybe get some opportunities to get in on some of that activity, right? It would be a more fair marketplace, but I don't think you're ever going to get it because the current system benefits the block traders too much, right? And the market really cares more about the money that is being made by the large institutions way more than it cares about what's happening with us, right? Not everyone not knowing is fairer than some people knowing, which is what happened with. I don't agree. I think that everybody knowing that it's the Bank of Japan is like a really important piece of information and it's not really fair to the people that don't know that to the people that do know that, right? It tilts the market very much in favor of the people executing the block orders. Whereas the market before, the locals were really the ones that had the most power, per se. And I think that is fair because the locals know the most about their instrument and have had to sacrifice and put the most risk on in order to do that. And so I think that they should be the ones that get paid for it. You know, essentially what you do as a local is harder than what these block traders do, I think. That might be a really naive opinion or ignorant opinion, but that's what I think. Otherwise, what you're saying is screwing over all of the retail traders is good for the market in the long run, right? Data access has improved a lot and will be improving, which is good. Yeah. Just that was I went through that rabbit hole a lot at the beginning of my trading, right? Was like, what kind of data is available to me? Because it always kind of turned into, when I was thinking about things from a theoretical perspective, as like the piece of information that I really needed to have in order to really make an effective trading system was always a piece of information that wasn't available, right? Block order, snap back the square root law. Yeah. Well, I guess the thing is that even if we could see who we're trading against, it wouldn't allow retail traders to be the locals again because the algorithms are what stops that, right? Man, my nose just, there's nothing there. I thought maybe there's a hair and I just need to move the hair or something, but it's just so crazy and I can't stop rubbing my nose. The block order snapback. Well, if what would happen is if you were the Bank of Japan, market maker would as soon as a market maker sees your orders come through, they would pull. Is what would happen. They would still be able to work it out, but they would have to negotiate a little bit, you know. It would be like on the close. So what happens on the close if you're watching the treasuries every time is the large players that are long or short or whatever the deal is, they start showing their orders and where they want to go, and they kind of have to split the difference at some point. And sometimes one guy has to acquiesce to the other based on how strong their position is and everything else like that. That's the sort of thing that should be going on between the locals and the people executing the block orders, right? So that, you know, everybody can have a chance to make money and the transaction is fair. What happens right now instead is the person executing the block order can just execute it against everybody and nobody really understands what's going on until it's too late. And so the noise traders essentially get screwed over every time. Just in, Ukraine launches offensive to drive out Russian forces in Northeast. I saw some stuff on TikTok about that last night as well. Well, I have to say, it looked really strong when they came up here. Remember how I said, like, I wish, or when I saw that, I thought about going in, but I was suspicious about the order and I was off. All these reasons I didn't take it. Then we came up to the highs and I said, like, it really makes me want to take my account out, because what if they break the highs? But look, it's just ranged here since then. How long has it been? That happened about the top of the hour, so it's been about 30 minutes. Well, we might, if there's another leg, it might not happen until after we're done. Till after we're done trading. Oh, there you go. Futures Trader 71 explains how sim trading can be used to hone in on problem areas. One thing's good. You know, this is something that really bothers me in the retail trading space, is that retail traders are always trying to, like, basically they say don't trade sim, right? Like, I get it, like, it's better to trade live for sure, but like, if you don't have an edge, you're not really gaining anything from losing money, right? Versus doing it on sim until you've, like, figured out what the problem is, or where the edge is going to come from, right? Once you've figured out where the edges come from, and that's where where I kind of come into play, is that I can help you get to that spot a lot faster, right? Because we know that the market is more informationally inefficient than it is statistically efficient. So we can say, here are all of the things that you can kind of look at, and this is the kind of information that you need to be able to look at. And a lot of it is like news and reading CNBC and stuff, right? Okay, now once you've done that, I've saved you like 5 years of wasting time with indicators and stuff, okay? But you're still going to have to spend time to learn the market, understand how they kind of react to things, how these kind of order flow things kind of play out, and get a feel for them and everything. And then even after you know all of that, that just kind of puts you on par with the market, right? So during that whole time period, which is probably going to be years, where you're trying to figure the market out, does it really make a difference that you're using live money versus a sim? Well, you're going to get better emotional experience from it, right? But you got to ask yourself, okay, how much money am I going to lose over the course of 5 years trying to do this? Especially if you're trading E-minis, right? Do you really have tens of thousands of dollars to lose? I'm thinking most of you don't. So it'd be better to trade a sim, right? Well, the S&P 500 did recover most of the initial selling that came off of the open, but they have not, as of yet, been able to extend back up into the 4150 area. Although we must be cognizant that that could be a magnet, a target on the day. Still, I don't know. Maybe not, but I'm definitely keeping an eye on it. Let's see here. What you asking here? Can the people who execute the large order trade the order itself? No. Well, what was happening was they were telling certain favored hedge funds about it, right? And so the hedge fund would be able to front run that order, and then that would allow them to get more business from the hedge fund in the future or things like that, right? So yeah, I guess kind of could. But there's rules about that sort of stuff. There are regulations. Yeah, a little bit of a turn down. I don't know. It being 8:30, I'm kind of sitting here like, well, the S&P 500 might rally back up to 4150. But it's kind of later in the day. I don't know if that's actually going to happen. What I see right now is kind of like there was a bunch of trading and it all ended up being for nothing. So maybe everybody realizes that this is all just traders trading. There's no real fundamental driver for it. Maybe some Japanese hedge funds were kind of involved here in the interest rates, and then next week they reset and maybe aren't like so panic sell. Can only hope. I can only hope. Because my 401k is looking a little oh man, a 5% down day is a little ugly, guys. I can't stand watching it anymore. And the Americans, they did it to us. So the Japanese were selling ES? It's possible. I think that the Japanese were definitely selling treasuries. I think that a lot of the really strong sells that have come through have been the Japanese, yeah. Both the Japanese sovereign wealth fund and the pension funds. But it may also be the case that they have stocks and then yeah, they sell because they can't hedge the currency risk anymore. Possible. On the other hand, this really strong bull move that we had in the equities is coming right back to basically where things were when we started at 118 even. So it's not very often that you get these kinds of, like what we're getting today is a little bit of what I thought was going to be happening yesterday. It actually was starting to happen. Like there was people pushing back against it really strongly. So maybe yesterday that didn't go that way because it really was Japanese pension funds, but maybe now that they're done, maybe these dip buyers below or sorry, with yields above 3, maybe they start to have a little bit more success. Because you know what? Like if there's going to be a recession, 3% is not bad. Not saying I think there's going to be a recession. If there's going to be a recession, then those I bonds, man, look, listen, for you, because it sounds like there's a couple of you guys out there that think that there's going to be a recession. If you think there's going to be a recession, then what are you waiting for? Why aren't you buying those inflation protect bonds? on Treasury Direct. Just go in there. But I think you can buy like up to 10K of them. What are you waiting for? Seriously. Scrolling through Twitter here. Wait and see what happens the next few months in the bond market. Yeah. You know, like one of the things is that I kind of thought that when we were at 2% that things were going to calm down a little bit. And then all of a sudden they raised another whole percentage point, right? Aren't recessions actually good to just set up the next boom and bust cycle? That's what I'm thinking. Well, having a tiny recession here probably wouldn't be so bad, yeah. Because having like the one of the things here is that really what we want to have is a prolonged period of okay growth, right? Like we don't actually have to be 3% year over year every year. It does need to be more than what the interest rate is, right? We need to grow more than the interest rate. So, you know, if growth is going to be low, then the interest rate is going to be low. So that's why seeing all these interest rates like, you know, blowing out and people talking about being 4% or higher, that's when it starts to become like a real problem for just for the US government and the economy as a whole, right? So a recession is a deflationary force, generally speaking. So if we were to have like an actual recession and it was just like a really short, brief one, then yeah, that wouldn't be so bad. And right now we're kind of looking at like, it's unlikely that we actually get a recession, but if we do have a recession, it looks like it'll probably be mild. So I think that we're still in an okay spot. But I think that larger picture, it looks like inflation is already peaking because the things that were creating it are already past. So we'll see how much this current weakness goes for, but I think in the long run they're probably gonna be fine. But some people were saying that thinking is delusional because we're no longer in a bull. That's like bull market thinking, and we're no longer in the age of Tina and all that stuff. You know, where there is no alternative. But the long-term inflationary forces are, in fact, still deflationary. So what's this here? Are they reading something that one of the Fed speakers, you know, this rally might have been because of something that the Fed speaker said that I didn't catch on my news squawk. Oh, this was Neil Kashkari's speech. If supply chain disruptions resolve soon, we might only need to take policy back to neutral or go modestly above, says Fed's Kashkari. If not, we will likely have to push long-term real rates to a contractionary stance to bring supply and demand into balance. Well, he's correct. That's all correct. It's just that the current trajectory suggests that well, I don't know about if it's all supply chain disruptions. Like a lot of it was the fiscal stimulus, right? In Europe, where I come from, I am sure we will get one. You really think so? Well, I guess because of the whole Russia situation, and if they have to embargo Russian oil and the sorts of problems that can cause. Well, that's hindsight? No, it's not hindsight. I'm trying to make a prediction here, right? And we can even kind of pinpoint a couple of places where we're going to have key decisions on that theory, right? So the first big one is next week is CPI, right? CPI comes out. What I'm expecting to see, well, let's come and look at where we're at. And bring a browser window over here. What am I, from Boston? Okay. And we go into next week. Okay, so CPI is on Wednesday. And I don't have estimates for it yet. But the previous month was spot 3. Okay. Remember, spot 3 is usually like between spot 1 and spot 3, right? Spot 3 is on the higher side of that. For the longest time, the estimate was always spot 2, right? And then all of a sudden we started getting these ones where it was like spot 8, spot 9, a couple of spot 9s up there, right? All of this sort of stuff. Then it came back to spot 3. So I'm going to venture a guess that the estimates are going to be at spot 3 again. But we'll see. That I could be dead wrong about that. They could be a little higher again. But I think that the CPI estimate will be spot 3, and that it will come in at spot 3. So if that happens, then that would be a very strong supporting piece of evidence towards the theory that I'm talking about, that peak inflation has already kind of passed us, and that the Federal Reserve should be trying to get back to neutral, but that it's not going to need to push rates up excessively high to slow the economy down. Yep. That's the bet. That's the bet that I've made. And I don't know if technically you can consider this putting money on it, but I contributed more into some of my retirement accounts and stuff this month, because I do believe that now is a good time to be kind of putting more in, right? But if I'm wrong, then that means that a year from now we're going to be even lower in the S&P 500, and we could be talking about like 50 to 80% drawdowns in some indexes, and I'm going to look really, I don't know how foolish I'll look, but I'll definitely feel bad that I lost so much money in my retirement funds, and hope that it comes back eventually. Right? Gotcha. You see what I'm saying? That's kind of the longer run economic calculus that is going on, right? And that's why all of this action is kind of a little bit distressing, because they're acting like there's an active economic crisis going on. How is that the case unless the data that they're getting right now says that we're like actively going into recession, and the Federal Reserve will have to keep interest rates high and contractionary for a prolonged period of time to create a prolonged bear market, like the longest bear market ever or something like that, right? I get your premise, but that is not day trading. It's not. It's not, but it's very relevant to what you do in day trading, isn't it, right? For instance, you keep asking about how do I know which kind of news events are going to have the most impact? Well, I'll tell you, CPI is probably the biggest one right now. If that CPI comes out and it is spot 6 again or higher, then this market is going to flip. And I really mean like if we get a reading of spot 6 or higher in the CPI, in core CPI rather, then this 10-year is headed to 4%. Seriously. But I don't think it's going to happen. Right? So your understanding about the current macro environment and the different beliefs that different participants have in the market and the bets that they're placing on can very much inform your day trading and help you predict future order flows, right? So I can come in here and I can say, well, I know that there are some people that think things are really bad. And even though I might not agree with them, I know that those orders are going to come through and that I need to account for them. Right. Impact does not. Direction FOMC was stronger and you made money trading it to the upside and to the downside back to back. Yeah, you did. Well, for all we know, what happened on FOMC was the initial news came out. Somebody traded it based on what they heard on the news, or let's say there was a large meta order that traded it. And then as soon as it happened, they decided to take profits on their large meta order. And that's what made it price swing all the way back down the other way. Right? Like all of that activity, at least that initial activity off of the FOMC can be explained by just traders trading. But usually when you get a good piece of news, there's a pretty clear direction that it's going to go, right? Right. Like I think the golden example was like the May 2020, was it? May 2020. No, it must not have been May. No, it was May. Yeah. The May 2020 non-farms report, right? They were expecting a reading of like -300, and it ended up being a reading of +500. Actually, we can look at it on here. I go back to this week so that I can see the non-farms employment change. Yep, here it is. And yeah, it was June. Okay, yeah. So the best example was the June of 2020, right? They were expecting a reading of -7 million, and they ended up getting a +2 million, right? Do you remember that? You were here, Salim, weren't you? Do you remember that one? Oh my gosh, that was. I should have been so much more aggressive on that day. Because when you go and you look, I don't think that I would have to like load up a bunch of data to see that. I don't think I want to do that. But basically, there was a pop. When the news happened, there was a pop. And then it kind of went flat until the S&P 500 opened. And then the whole rest of the day, it just kept going up and 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 up. Yeah, you were there. Yeah. That's the best example, right? Is where a piece of news that's released in the morning results in a trend day. Because now you've got a situation where, you have a piece of information that can tell you fairly reliably that you can get a trend day, and then it's an easy trade. And I don't know why more people don't trade it, or why more people didn't trade that one, but that was an instance where you could have made some money. Yeah. I saw a video of Peter Davies explaining a setup called the Crocodile. He got it from a trader in Singapore prop, which basically aims to take one tick profit. Is that a good way to go? Probably not, unless it's a really inefficient market. So I think that the person that he was talking to was making their money very much in the pre-2008 world, when the algo traders basically took over, because that's what the algo traders are doing. So right now, if we think that the market is going to move up, for instance, here, I can switch. I can switch to this one. Okay. So right now, I can put an order in right there. Nope. Oh, see, I can't. Oh, actually, it gave it to me. Well, if that was a live order, I think I would have gotten filled, but I was quick enough to cancel it. That's basically what you have to do. Is like, if it ticks up, you want to be in the line so that, well, okay, I don't know if I have a clear enough direction to do it. Essentially, what you want to do is you put your order in there so that you're like 300 in the queue, and then it ticks up, and then it's 1,000. So now you're relatively far at the front of the queue, right? Then, now that you have a good spot in the queue, if they're like retracing it, you could do something like you could hit into it with a market order just as it's clearing here, on the theory that the other market orders will continue through and you'll get the easy fill, right? And you can trade those. Okay. This is hard to do. In the modern market, this is hard to do. But why don't you trade only those? Well, hold on, the new squawk is talking. It's talking about the next Fed speaker is going to come up. I think the answer to that is really that probably we should just only trade those, right? Like I said, the key thing here is selection. Knowing when you really actually have an edge that's you really have a good predictor of order flow or not. I think that it can be really hard to know in some instances. And not only that, but you're always going to flirt with it, right? Because the higher of a threshold you give yourself, the less trades you're going to take. And like if your threshold is, I'm only going to trade ones where my predictor of order flow is as strong as that one in off of that May June non-farms report, then basically you're only ever going to take one trade in your career because that's a once in a lifetime kind of an event, right? So the real question is, how do you determine what is a strong enough edge? And how do you know that you're really in the appropriate time to do it? That's the thing that I don't think that I've figured out. That can only come with experience. I'm getting better at it, but you know what? I made a mistake yesterday for sure. I found it similar to the Gary method. Well, yeah, I mean, what Gary talks about is like a similar sort of a thing, right? Because really, ultimately, what you're doing, Axelrod, is you're saying, I want to do market making. I'm going to place my best bid, best offer based on what, a correlated instrument is. So if we tick up, then I can put my best bid in here. That hopefully gives me a good spot in the queue. I just leave it there. We move up, I'm just going to leave it there so that I maintain the good spot in the queue. Because the thing that really kind of makes the market making difficult is your queue position. The problem, though, is being 300 in line enough for starters? And then second of all, like, can you really, because what she was doing is really quite tedious. Like think about that. Like, I don't want to get filled there at that 300 necessarily, right? So let's just say that I had it like this. Let's just say that, well, let's change them to one lots. I have it like this, right? If it ticks up, I'm going to cancel one of these. Right now it's equal, so I don't know which side is going to go. Now this downside, I'm probably going to cancel this. And I'm going to add one here, right? But I don't think that they actually do it that way. I think that what they do is they only go one side. I think it's going down. I'm only going to market make one side of the market. You're a robot. It would do both sides. So so I'm just kind of rethinking that, right? We'd only want to do one side of it. But if I start to see any real volume coming into that, then I want to pull it, right? Okay, well, I could put 625 now. Oh, I got filled, so I don't like that. I want to scratch that. right? But then you got to be careful because, you know, there's still like the probability of adverse excursion. I'm going to cancel that one. Put 2 down there, you know, but their edge is basically being in, being at the front of the queue. But I'm just saying, in that case, so what just happened to me, right? The adverse excursion, is that worth the spot that you get in the queue? Well, maybe in a different market it would have been. And, you know, if it's an immature market, I think that you could probably still get away with those sorts of tricks. But I think that when Peter Davies talks about that he's not saying like the alligator is a great way to trade. I'm going to teach you how to do that, right? I'm pretty sure that he says like this is a really difficult and tedious way of trading. He was just relating it to us, you know, so that we can understand kind of how some of these things work, right? Okay, now I understand why market makers blow up when there's huge flow against them. Yeah, exactly. And like as a market maker, you might want to try, like if I, like let's say I only have 2 contracts of inventory, right? Let's say that the maximum inventory that I want to take is like 20, right? I could say, oh, there's a trend going on here. Okay, cancel this. Let the trend come up. Okay, now it's to the point where it's balancing back out. I can start market making again. Now I can just put 4 lots up in here and make back over here what I lost on here, and it all comes out, you know, in the end. So really what you're doing is you're adding to losers, but that's what you kind of have to do. It's time for me to get going, guys. Good, it was a fun stream. I enjoyed it, even though we didn't take any trades, and it's a really kind of confusing market right now. But I wish I could give you a better example on this thing, but I think that we would have to probably practice doing alligators all week to really even show a good example of it working. But yeah, what she was doing is tedious, right? Because she basically, like, the goal here, look, I have 2 lots in here with a spot at 259 in the queue. That's what they're trying to do, right? Now, there's kind of different ways that you can play it at that point. I think that for her, probably what she was doing is that then I would come in and I would put a stop limit in here. And I would say, if stop limit 300 at this price right here, right? So if they're about to clear that price, I'm going to hit in with a market with a limit offer at 30.5 to, you know, which hopefully it converts into a market order. And then I immediately get filled at 30, right? So the amount of risk that you're taking on is super, super tiny. And you have the queue in your favor. Oh, okay, so there it took it, but I didn't get any fills at 30, right? It can turn into a very nuanced and complicated thing when you're really, but you get plenty of practice doing it, right? It's just with the way that these markets move, it's a tough way to trade, right? So I don't think that I would base my entire trading strategy on that, but there we go. Now I got it. I can take the other one off. Oh, come on. Oh, because I'm trying to put a volume stop in. That's why. Okay, now I can just mark it out. So in the end, I made money off of the alligator. A little bit of luck. Okay. That's how it works though. You know what though? If you're on a combine, you actually can do this, and you could probably pass a combine doing this. Because the combine sim accounts don't do the order book correctly. And if it moves far enough away from your price, it assumes that you're at the front of the queue, even though it doesn't really know. And so it will give you alligators when it shouldn't. So you could theoretically pass a combine from doing that, but I've never bothered doing that. It might be fun. It might be a fun thing to do. Maybe that could be our summer project, is to try and pass a combine with alligators. But it's time for me to go, guys. I'll see you Monday. Rest well, because I'm next week's got CPI. It's going to be just as crazy, right? But in the meantime, stay profitable, or at least don't lose it all. All right.